Hello and welcome back to Old Man Advice. Today we're going to talk about a great topic that everyone should understand, and that is the stock market. Now, if you're a young person, if you're anywhere from your late or mid to late teens to your 20s, 30s, even 40s, you should probably think about getting into the stock market. And if you have what we call long time horizon, which means you have a number of years before you really need to start taking that money out, then it's a really good idea to think about getting into the stock market. And if you know a good approach to doing just that, then you may have some great success going forward. Now, as of the recording of this video, the stock market, by the way, has been really bad. Really bad. There's been lots of spending and lots of money has had to be printed to back up all this spending by the government. And as a result of that, we have inflated the money supply. So you have too much money going after too few goods, as we say. And when you inflate the money supply, you cause inflation. And the prices of everything have gone up. And we've seen enormous price increases in foods, in lumber, in all these different things that people have to buy. And so in order to fight inflation, the Federal Reserve Bank, often referred to as just the Fed, has had to increase interest rates rather aggressively in order to try to fight inflation. And basically what they're trying to do is to slow the economy down. And in doing so, of course, the higher prices on everything are obviously hurting people, especially middle class people and people of lower income. And at the same time, it is having a chilling effect on Wall Street and the stock market. So Wall Street doesn't like what's going on. They don't like having the Federal Reserve confirm that they're increasing interest rates again. The Federal Reserve Chairman, Jerome Powell, has just recently said that he will likely be moving forward with another large interest rate increase. The last two have been what we call in the financial services business 75 basis points or 3/4 of a point, which are some big jumps. And the stock market doesn't like that. So the stock market had rallied or gone up really well for about 11 or 12 years. And that rally really started slowing down to a crawl in the first part of 2021, and then we saw a lot of what's called volatility, where the market moved up and down quite a lot. And what we've seen in recent days is some enormous down days. Just before this video was recorded, we had a down day in the market of over 1,000 points. So people's 401k plans and their IRAs and their savings and the savings of company retirement plans and everything else went down a lot. I mean, this probably took billions and billions of dollars out of people's savings. And I can speak personally, it took a big chunk out of my own savings. So even though that's happened, we can't assume that this bear market is going to be that prolonged. I mean, the history of the stock market for people that have a longer time horizon who can save for 10 or 20 or 30 years has generally been really good. And I, for one, am optimistic that we will get back into a rally or bull market going forward. And so young people should think about how they want to save money in the stock market. And especially people that may have gotten a first job or a job that pays more, and they're doing okay. They may have a little bit money left over, although there's obviously less disposable income right now for a lot of people because food prices and gas prices are so high. But for those people who do have some disposable income, some money that they, after all the bills are paid, after all their regular weekly and monthly obligations are met, they may have some money left over. What they can do with that money is invest it in the stock market, either in individual stocks or in what are called exchange-traded funds or ETFs. Some people still use mutual funds too, but what someone should do, and what I'm going to try to explain right now to make this process a little bit easier in terms of what you choose to get into, is I have two suggestions I'm going to go over today. One is that a lot of people will invest in a company or a market that they really believe in. Now, as an example of that, think of all the, I guess, millions of people that are in the Apple ecosystem. So they wouldn't think of buying anything else but an Apple phone. When they go back to upgrade their phone, they're going to go from the 11 to the 12 to the 13, or maybe the 11 to the 13. They probably went from the 8 to, up to the 11. Instead of going outside the Apple ecosystem and purchasing an Android, they probably stayed in the Apple ecosystem. And people who are Android lovers, who are so used to using Android, will generally stay within that ecosystem. So in that case, a person that's a big fan of Apple who's stuck with their products, maybe they own a Mac, a MacBook, and they may even have Apple Play, and they may have other Apple products. Those people may be so sold on that company, which happens to have the best brand and brand loyalty of any company. Those people may be so sold on that company that if they haven't done so already, maybe they should invest in Apple, because they may feel Apple has a good future and that the company's not going to go out of business in a year, that it's going to be around for several years and it's going to continue to have a loyal following like it does. Other people may have just purchased their first electric car, or nowadays it could be an electric truck. And they may feel really optimistic about the future of EV. And so they may assess and look at some of the EV manufacturers, it could be Tesla, it could be one of the others. It used to only be Tesla, but now there are more choices. And those people, because it's a product they believe in, or maybe it's something they own, this is a great way to get into the market, because they're buying into something because they know it and because they have experience with it and they're happy with it. And they may have friends that are happy with it. So getting back to the Apple example, if you happen to own an Apple phone and your friends own Apple phones and everyone's happy with using them, and the iOS updates are great, and new features on new phones are great, and the cameras are great, and everything else is making you happy, then obviously that's probably a company you would want to invest in for a personal reason, because you know firsthand the product's good. That could be the same with a service. If there's a company that offers a service and you're really happy with that service and you've used it before, you may think, you know, I believe in that service so much that I'm going to invest in that company. So this is a great starting point for getting into the market, investing in a company that provides a service or a product that you really believe in. What better reason to buy a stock, right? Now, the market has been pretty hard hit recently as of the recording of this video, so obviously a lot of stocks are depressed more than they had been, and in some cases the stock prices are really reasonable. You might be buying the stock on sale right now. It's a good idea to take a look at the stock and take a look at its performance in recent months and see where it is. I mean, if the price is really low compared to where it's been in recent months or the past year, maybe it's a good time to get into it. That's a decision you would have to make. Now, the other criteria for getting into a particular stock is maybe you don't necessarily own a product or service, but you've been paying close attention and you can see trends. You can see that there are certain trends that we're moving into that you feel will be stronger and stronger going into the future. Now, this could be because of new technology. For instance, more and more things move into the cloud, so the companies that support servers and remote storage and other things may be a good place to go in terms of investments. If you see other things that you feel are trends, maybe certain types of makeup are popular with girls, and this looks like it's going to be a trend that people are going to keep supporting for years. Maybe it's some other kind of nanotechnology. Maybe it's trends in biotechnology or medicine. But you may notice something that looks like it really has a good future. And it may be a new discovery, it may be a new technology, but you're convinced that it will probably go someplace and it will probably improve and get better and better. It may be a new treatment that's a brand new approach to mental health, or to medical problems, or to disease treatment, and you see it as being something that has an enormous amount of potential. So that's another reason why you may want to invest in that type of stock. Either something you own or something you feel good about as a trend. And not just a trend that might die off in 6 months, but I'm talking about a trend, something that has a real good future. Now, you can either invest directly in the stock, or, as I mentioned earlier, there are ETFs, exchange-traded funds, that invest in specific sectors. One I've owned for several years now is a technology ETF, and that ETF just invests in mostly pretty well-known big tech companies like Apple and others. So as high-tech companies did really well during the last market rally, that ETF did really well. More recently, some of those companies have been pretty hard hit in the market, and that fund is down somewhat. But But you can get into a sector fund like biotechnology, medicine, pure technology plays, and other things like that, if you don't want to invest directly into a stock, which technically, usually will be more volatile. And for some people, if they keep a close eye on it, they may not be able to stomach those ups and downs. It's like a roller coaster ride sometimes. Some people don't want that. So when you have an ETF, they may own 50 stocks or 100 stocks or a few hundred stocks, and that sometimes can help smooth out the ride a little bit. But the important thing is, especially if you're young, is to get into the stock market if it's something that you feel that you have the risk tolerance to do and you're comfortable doing, and also do it right away. As I talked about in my previous video, you should set a goal to do these things and then put that goal in action right away. Don't wait. I mean, don't, like the old saying goes, don't put off until tomorrow what you can do today. So if you can get started tomorrow or the next day and not put off a week or 2 weeks, at which point it may be put off forever, it's a good thing to do it now. And do your homework, of course, and make sure whatever you invest in looks like it has a good future, and the financials of the company look sound, and that's what you should do. Now, I would appreciate it if you would please like this video, please subscribe to this channel. All the information that you'll ever see on this channel will benefit you and is designed to improve your life and allow you to have a better life going forward. Thanks for watching. We'll see you again.